Hello, everyone, and welcome to this week's GoNoGo show. As you can see, I'm all by myself today. Tyler is traveling. I believe he's in the Windy City today, Chicago, so hopefully he's not too cold and not too swept up in the wind. So we'll get started with our overview of the markets from a top-down perspective. Let me just share my screen. And as we normally do, we're going to start with the asset class heat map. Let me load it up. So here we are, and we've seen some change this week. I'm sure you can see the top panel, which is the equity markets represented by the S&P 500. The ETF ticker SPY has rolled over into a no-go trend. So, of course, we saw an amber go fish bar towards the beginning of the week, and then that gave way to pink bars, and now today a purple, stronger no-go bar. Of course, we're filming this just around lunchtime on Thursday, so things could change. But this is what we're seeing at the moment. We are seeing a change in trend for the equity markets. Now, Treasury bond prices, the second panel, as you know, those will be moving inversely to rates. We'll look at rates in just a little minute. And so we can see that Treasury bond prices have stayed in their strong no-go. So that suggests that rates are continuing to rise, which could be a headwind, of course, for equities. Commodities in the third panel, that shows us that we have a no-go that persists in the commodity markets. And in the fourth panel here, of course, the dollar, we've got a strong go trend in the dollar as well. So that trend has really taken hold and continued. And in the lower panel, we've got Bitcoin this week, just showing how Bitcoin has been in a go trend. So let's start now. As we do, we'll break down the markets, starting with the equity markets. We'll look at it on a couple of different time frames, and we'll see what the GoNoGo charts are telling us. Now, as I said, from that asset map, we saw equities roll over into a no-go trend. And we were watching very carefully since here. If you can see my crosshairs moving, we saw this sideways movement in the equities, and then we were watching the zero line. Remember, GoNoGo charts places a lot of value on this objective level in the oscillator panel. When a trend is in place, a go trend, of course, being the blue and aqua bars, those blended inputs from a trend perspective telling us we're in a go trend when we see blue and aqua bars. What we then want to see is if the oscillator stays in positive territory, because we know that in theory, there should be no overselling. There should be no excessive selling in an uptrend. So when we look to the oscillator tagging the zero line here, we're looking to see if it finds support. So at this point on the chart, where we were still moving sideways, we're watching to see if we hold the zero line as support. Of course, we didn't. We broke through the zero line. We saw volume increase, that dark blue line, as volume picked up, and the oscillator move into negative territory. So you can see how that gave us a little bit of an advance warning that there was something wrong with this new go trend. And we've seen this before with markets struggling to get going. So we can see that here now we have got a no-go trend that followed that break below the zero line into negative territory. And that's trend strength picking up to painting a stronger purple bar today. Now, we are a little bit up on the day, so we'll see if that holds and what happens as we move towards the close. If we change this to a weekly chart, we can really see that the weight of the evidence has told us that for now, the no-go remains in place. I think a lot of people got excited. We saw this string of amber go fish bars. That was sort of telling us there was some uncertainty around this larger time frame, whether or not we'd be able to break out of the no-go, move to higher highs, and perhaps even see a change in the trend environment to see the GoNoGo trend indicator perhaps painting aqua or blue bars. Well, that hasn't happened. The last 2 weeks have seen us revert back to no-go colors. Now, we are watching the indicator paint pink no-go bars. That's, of course, the weaker form of the no-go, but it has moved out of amber bars back into no-go territory. Now, we must look at the zero line again with the oscillator, because that gives us a little bit of a contradiction in terms of what we were just saying about the trend in price. We're in a no-go still. Prices have moved lower, but we are seeing some positive momentum over the last month or so that now we'll look to see if that positive momentum can survive. We're back at the zero line, meaning neutral readings for our oscillator. Remember, the GoNoGo oscillator, just like the GoNoGo trend, is a blend of several of the most robust and most used momentum ideas in technical analysis. So what we're seeing right now with that reading at zero is that those inputs are all in neutral territory. So momentum at the moment, not having much direction. Was positive preceding this reading, so we're now watching to see if we find support at the zero level, or if we break back into negative territory, which would then, of course, confirm the move back to no-go bars in the price panel. So hopefully that gives us an idea of what's happening with the equity markets. Let's take a look around now at some of the macro factors that we know can have such an impact. Let's start with Treasury rates. We always like to look at Treasury rates. Of course, we know that on a long time frame, we're in a rising rate environment, but let's go back to the daily chart and see exactly what we mean. We've had this level on the chart. If you can see my crosshair here, we've had this level on the chart as an area that might provide some resistance as the GoNoGo trend sees price climbing in a new Go trend. But we were able to get through that level. There's some clustering here, but you can see how it's a level that has been support, it's been resistance before in the chart, and now we've broken cleanly above that level, and we should see support here at that level going forward. So Go trend well and truly in place. We see a gap higher today on Treasury rates. So rising rates, not the best news, of course, for the stock market. If we move on from rates to take a look at the dollar, we see likewise in sort of similar fashion, a Go trend emerging in the dollar after this strong no-go correction that we saw throughout the end of last year and into the beginning of this year. We saw that uncertain period as price moved sideways in amber Go fish bars that gave way to a Go trend, which has persisted. And again, today we see that gap higher. We're looking to see now if the dollar perhaps can set a new higher high in this Go trend. Momentum for the dollar is clearly in positive territory, not overbought, and volume's pretty heavy. So ever since this oscillator break on heavy volume back in the beginning of February, we've seen prices climb. So a strong Go trend in place on the dollar, just as it was for Treasury rates. From here, let's go and have a look at gold. Gold has been very interesting. We saw gold rally strongly into the end of the year and into January and early February, but we've seen that trend reverse. We've looked at this chart several times over the last couple of weeks, a no-go trend in gold, but wanted to point out this important inflection point here now as the oscillator has rallied from negative territory back up to test the zero line. So we're seeing that rally in momentum back to zero to test the momentum at the zero level. So that's suggesting now that momentum in the negative direction has cooled off, and we're seeing a pause and some neutral readings from momentum. So we're going to watch. What would we expect? Everybody that's starting to get familiar, hopefully, with GoNoGo charts, we expect, if this no-go trend is to continue, to see resistance at the zero line and the oscillator turned back into negative territory. So you can see how that idea plays out when in a trend. We see this Go trend here, oscillator finding support over and over at the zero line. When it doesn't, that's a threat. So now we're in a no-go trend. We'll expect to see resistance at the zero line if the no-go trend is to continue. So if this is a lower high, then we'll see oscillator turned away by zero and prices move lower. Of course, the flip side is if the oscillator breaks back into positive territory, then that could signal some difficulty for the no-go trend to continue. But right now, as it speaks, way to the evidence, no-go trend in gold and the oscillator testing zero from below. What about oil? Oil has been, of course, very, very choppy, and that continues. So we've been zooming out and trying to look at oil on a longer time frame chart. And really, nothing has changed for several weeks. If we were to throw in a trend line here, this is what we've been looking at. So a no-go trend in place, prices moving gradually lower, but once again failed to make a lower low here and oscillator back at zero. Very interesting that the oscillator struggled to move significantly away from the zero line. So yes, it's been finding resistance at the zero line. It's being rejected over and over, but not moving very far into negative territory. And that's excuse me, that's meant that the price has been unable to really move lower and set a new lower low. So still an inflection point. We're coming back towards this downward sloping trend line. Oscillator riding the zero line as a squeeze starts to build. So we're going to watch and see, of course, what happens next for oil. So that's a look around at the macro factors that affect equities. We also started off, of course, with the asset map to see where the trends are in the grand scheme of things. Let's take a look now at the equity markets and go a little bit into more detail as we look at the sector rel map. So, of course, those familiar with our show and familiar with the GoNoGo charts, the maps give us a way to visualize trend without having to focus on price movements. So if you imagine each of these panels is just a colored representation of the trend that we're seeing for that asset. Now, the significant thing that's different with the rel map than that asset map that we had at the beginning is that this is displaying the trend of the relative strength ratio of each sector to the S&P. So this is not just the GoNoGo trend applied to the sector, it's applied to the relative strength ratio of the sector to the S&P. So that really gives us a sense of outperformance and underperformance across the sectors. So what's happened this week? Well, a little bit of change, not too much in terms of where the real leadership is coming from. We're still seeing that on a relative performance basis, the outperformance is coming from the growth sectors. We've got technology along the top, discretionary, the second panel, and communications, the third panel. So you can still see that outperformance is coming from those growth sectors. Down the bottom of the map here, we've got healthcare, staples, utilities. Those are really the underperformers. So it's still defense that's underperforming. Strong no-go trends here on the defensive sectors. We're seeing a little change in the middle. So this is interesting. The more sort of economic sectors or the cyclical sectors of the markets starting to see a little bit of strengthening. We're seeing financials painting a go bar before it went back to amber. We're seeing industrials painting a go bar again. And that's a change since last week when we were seeing strong no-goes in the industrial sectors and materials in amber bars as well. So perhaps we're seeing a little bit of a rotation again towards the middle of the map. Okay, so having said all of that, let's take a look now at some of the sectors that are outperforming, and we'll pull out a security or two to give us a sense of where we might be best positioned if we're trying to look for outperformance at the security level, as well as, of course, from the sector level. So let's pull up a chart of, let's start with a chart of the discretionary sector, right? We've got tech, discretionary, and communications. So if we pull up a GoNoGo chart and we look at XLY, that's the GoNoGo chart for the discretionary sector. So what do we see right away? We see that we're still in a go trend for discretionaries. Now, we know that the S&P has already rolled over into no-go bars. So is this a case of the discretionary sector playing catch up and will soon roll over, or is it still hanging on to outperformance? It's very tenuous, of course, and we can see that we've fallen below these levels that were resistance. We were hoping they would become support. We also see that the oscillator has moved below zero, broken below zero, telling us that this trend is in trouble, as we see the weaker aqua bars from GoNoGo trend. So there's a lot of information here telling us that perhaps this is moving in the direction of the S&P, and it's just a little bit slower to do it. We've got heavy volume as the oscillator breaks below zero. We've got prices moving lower in a weaker color, and we're below these levels that could have been, or perhaps we hoped would have been, support. So what does this mean if we then look at something like Tesla? Tesla is in the consumer discretionary sector, and Tesla's been something that we may well have been looking at holding for several weeks now. We noted over the course of the last several months how the no-go trend that had been so strong in Tesla had been broken and finally had reversed. We saw that amber bar gap higher after oscillator had broken out of this small squeeze on heavy volume into positive territory. So we've been talking about Tesla since this area here, and we saw then it take hold in a go trend and continue to move higher and set a couple of higher highs. But where are we right now? I suppose that's what's important. Well, there's some problems on the horizon here for Tesla. If we are holding this security, we are still in a go trend. The weight of the evidence suggests that we are in a go trend, but it has weakened as prices move lower today. We are sort of holding on to these levels that have been support, right? We see the support here. There's some clustering of price activity. And so we will want to see that prices hold at these levels. What really is concerning is that the oscillator has broken out of a squeeze into negative territory. So if this go trend was to be healthy, we would have expected support at the zero line and price to climb and set a new higher high. Well, so far that hasn't happened. We've seen price fall, we've seen it weaken, and more worryingly, we've seen it fall below the zero line and break out of the squeeze to the downside. So that's our first real sign that there's something not quite right with this go trend. We can be sure that go trends don't move in straight lines, so we know that there will be some consolidation after this rally, which is what we've seen, but we would like to see this zero line hold, and it hasn't. Of course, like I said, it's just after lunch here, so we haven't closed for the day, but that is a bit of a concern if we end up with the oscillator in negative territory at the end of the day. So we'll have to see if it can regain positive territory, or if it falls again into a no-go trend, given momentum is now not on the side of the go trend. So that's a look at Tesla. Let's see. In the last couple of minutes here, I would, just for fun, I would like to pull up Bitcoin and see how Bitcoin looks. And Bitcoin has been an interesting chart because, as we've mentioned a few times, it seems to have done what it's done over the last few months without too much fanfare, which perhaps some are saying is a good thing. But very, very interesting moment yet again, in that we are in a max go-no-go squeeze. So we've had a strong rally, go trend in place. We've had a pullback, which actually was enough to cause the oscillator to break below zero, but we quickly regained that level, and we got continuation icons on the chart above. So you can see go trend still in place, continuation icons telling us momentum back in the direction of the trend, and we set a new high. But now we've pulled back once again, and the question will really be, is this a new higher low from these levels here, or will we see a breakdown here, which will see the squeeze broken into negative territory, which would then really be a threat to the go trend. So at the moment, Bitcoin hanging on in a go trend, actually painting today a strong color, a strong blue go color. GoNoGo oscillator riding the zero line as the GoNoGo squeeze grid climbs to a max. So we're going to watch very closely and see in which direction this squeeze is broken. So that's Bitcoin, and that's just about it from me. Next week, I think we will both be back. Tyler will be back from his travels. I just want to remind everybody that if you're watching this on YouTube, great, like and subscribe on the StockCharts channel. And if you're watching it on our YouTube channel, fantastic, like and subscribe, that would be great. And don't forget to check out the on-demand StockCharts TV app, because then you have access to all of StockCharts' great content wherever you may be. So thank you very much, everyone. Have a wonderful week, and we'll see you again next week.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.